Hello and welcome everyone to the live afternoon swing trading room. We are broadcasting live from Nashville, Tennessee. My name is Matt DeLong. I will be your host for this afternoon. Today is November 6th. It is DeLong Friday. FOMO Friday. No, it's DeLong Fridays. Yes. So where are my closet swing traders? My CSTs, make some noise. Put CST in the chat pane. Wrap up the long week. I like that. That's going to be a good contender. I wanna show you guys a few things I've been playing with this week. Let's look at some charts. Let's look at some trades. So I want to share a quick thought with you guys. I don't know if you guys know this about me, but I was diagnosed with MS. It's very painful. You guys may or may not know, but MS stands for, of course, multiple stupidity. How many of you guys have been diagnosed? So one thing I want to kind of help you guys with is suggest that all trades fit a strategy. So, right, all your trades need to fit one of your strategies. Don't just take a trade because someone else is taking it. Don't just take it. So I'm obviously, I'm not making fun of people with multiple sclerosis, of course. I'm just saying that I tend to make a lot of dumb decisions. So all my strategies try to kind of extract the silliness out of that. It tries to make the decision, take the decision away from myself. My job just to execute the strategy. So Edward, I'm sorry. That was a bad joke. I'm talking about MS as in multiple stupidity is what I've been diagnosed with, not multiple sclerosis. I apologize. So, so one of the things I learned early on, guys, is I should only be taking trades that fit a strategy, right? Just because somebody on Twitter says they're long in Facebook is not a good enough reason for me to be long in Facebook, right? I have to fit it has to fit into a plan, right? Mike says my wife doesn't have multiple stupidity. Okay. Oh my. Okay. Oh my. So I want to show you guys a few things. This is something I'm working on. You guys have heard Jeremy say, "Oh, it's time to get out. Let's take cash." There's this thing that is called distribution days. Have any of you guys ever heard of distribution days? It's basically a sell-off day where you have higher volume than the previous session and you're down 0.2% on an index, right? So let's say down 0.2% and higher volume than, or volume is just higher than yesterday volume. Today volume is higher than yesterday on an index. So don't ask me for this index. That I'm still playing with this. Don't ask me. It is that's what the code looks like. If you guys want to take a screenshot, don't ask me for it. I'm still playing with it. I haven't perfected this just yet. But the idea is that when 5 or more distribution days pile up, it is a yellow flag, right? It is a caution. For those of you NASCAR fans, that is, you guys know what that means, right? So this is obviously not necessarily an index. SPY is not an index. It is the ETF of the index. And if you take a look at the Qs, we actually have quite a few distribution days piling up. 1, 2, 3, 4, 5, 6. Now, if we were to go back in time, and let's say right through here, you guys can see that there's some days piling up, right? Jeremy called it right here. Going to cash. How many of you guys took advantage of that? How many of you guys, yeah, Ron IBD, this is their concept of distribution days. Absolutely. Yep, Rex around the corner. There might be something you can't quite see. You're not around the corner. You're not around the bend, right? So this is something that I'm working on to try to help people understand, because I get this question all, how did Jeremy know? How does Jeremy know? He has a direct phone on his desk. You probably don't know this, but a direct phone on his desk directly from the stock market. And they'll call him and say, Jerremy, today is the day. He's like, today. Going to cash, right? No, that doesn't happen. I'm joking, of course. He doesn't have any more or less tools than we have, but what he does have is experience, right? So how do you kind of think about this? How do you think of distribution days? Well, when you get here, you already, when you're up here, you're at 5. 5 are a caution sign. So the way I think about it is when I have 5 or more, I'm going to be I'm going to locking in some gains and taking some risk off the table, right? So I'm going to be taking my sales down. When it goes sideways for some period of time, I'm going to be thinking about rolling out my risk a little bit more, raising up my sales, right? Taking some more risk. And so that's kind of a thing that you learn as a swing trader is that you obviously have to have a decent strategy that you can execute. And then you also have to know when to roll back the risk and when to kind of open it and close it, right? Some people would refer to it as risk on or risk off, like the risk switch. Do you want to be full margin or no? Or mostly cash, right? Think of it as those kind of extremes. So this kind of helps kind of set that up. You guys may notice also in the swing trade log now, we do have a column. Let me see if I can pull this over. That is not the right spreadsheet. Let's see. Pulling it over. In the swing trade column, you'll see here that we now have some new things for discretionary. That's basically Jerremy. Positions trading is a strategy I haven't taught yet. Put sales, we know about. Momo, 10 EMA, and hammers, right? Hammer strategy. So we're ideally what I'd like to do in the afternoon room is if you guys want to talk about a specific stock, go ahead and don't tell me just the ticker. Go ahead and tell me also which strategy are you looking at on, because you can easily get, you can easily get multiple strategies. One says goes bullish, the other says go bearish, right? So ideally, we could kind of have the afternoon room flow that way. Like what strategy are we talking about? What ticker symbol, right? You guys with me? Yep. And again, the distribution days, the way it works is it goes back 25 days, 25 trading days, right? So that's how that works. Okay, let's take a look at, let's look at some stuff. Let's delete, remove my drawings, remove my distribution days. All right, guys, hit me with some ticker symbols. Let's practice this. Hit me with some ticker symbols and hit me with a strategy. Let's look at it. Let's jump into one of the 3 we've gone over, the 10 EMA, the Momo, or the put sales. What are your thoughts on SPY in the Qs? So, okay, here's my thoughts on SPY and Qs. You guys, obviously we could make an argument for kind of hitting its head right here, right? Kind of going sideways. You guys can see now this double bottom here, triple top here. Do we roll over? Do we break out? I don't know. I think if the election continues to drag on in the U.S. stock market, we still don't know who the president is or will be. We know who it is right now until January, mid-January. We don't know who it is, but I think it'll kind of get a little more choppy. Investors don't like the unknown. So for those of you who have lots of, if you're really green on some trades, this would be a time to look at our distribution days. We have 5, so I would be pulling back. I'd be taking the sales down a little bit. I would be locking in some gains. This would not be the time to open up, go all in. Now we could go higher, absolutely, but it's not like the weather indicators are telling us that it's going to be partly cloudy to stormy still until the election is figured out. So let's look at a couple of these. Let's see, Redfin, buy low, put sale. Buy low, put sale. If we were to turn on our naked put indicator today, ladies and gentlemen, oops. Try again. Okay, so today we got we're right we're right into this zone, right? We got the green dollar sign. Thomas, I'm not sure if you're asking what strike or what I think on it, but today would have been a signal to look at some put option premium in the 42, probably $40-ish time strike price. I don't know. I don't have the option chain in front of me right now, but it would have been a good time. So if you're looking for a 1 month option, obviously we're talking about 45 cents a premium. If you're looking at 2 months, we're talking about 90 cents, 3 months, $1.35. Ideally, I believe you can probably get more than that on this stock right here. And for those of you who may not remember, the blue line represents a 10% pullback from the close of the most recent high. So this little white candle here is the close of the most recent high, right? You guys follow me? So take 10% off that, do a 10% off sale, and that will draw you this exact blue line. And we want to be below the blue line when we're selling premium. We want to wait for a green dollar sign to appear, which means it is down 4.5% on the day, like intraday. And that gives us permission, a green light, to go to step two. Step two is check the premium and make sure we get at least 1% of premium per month. So we're selling a 1 month option contract, put option contract. We want to go out 1 month. We want 1%. So 45 cents. 2 months, 2%. So that'd be 90 cents. Yep. Let's see. Does it make sense, Thomas? I'm not sure what your specific question was. Are you talking about like position trading? You said buy low, put sale. So I assume that's what you're doing. Here's one thing that I like to do too, guys, is I'm going to teach next week on the strategy for how I pyramid in, how I position trade. And there's nothing wrong with, let's just randomly pick a couple places here on the chart here, and maybe right here. Maybe right here, 4 legs, okay? And let's say that up here, I'm going to buy 5 shares. Here at this level, I'm going to buy 10. This level, I'm going to buy 20. And this level, I'm going to buy, let's see, we're at 35. So let's do 65 down here. Now, how did I pick those numbers? I just picked them. So let's say, obviously, if we're talking about 5 shares right here, I can't sell a put because at this level, to enter this, I can in addition, but I can't enter with 5 shares. You can't sell just 5 shares. You can sell 5 contracts. So let's say we make this hundreds, just for a quick example. So again, this is a lower price stock, obviously below $50. Let's say I want to sell 5 option contracts here. I want to sell another 10 here, and then I want to buy actual shares here and buy actual shares here. So I'm kind of teaching how this strategy works, how I use it. And I do combine some of these. So for those of you who've been doing pyramid position trading for a while, you know that the stock could easily, Mr. Swiggles, let's see, the stock could easily go like this and never kind of fill you. And so in that case, that's also when I use the 10 EMA to enter, right? So we're going to swap over to a medium. So I would, these moving averages need to cross just a little bit, and I would enter, you know, somewhere up here whenever I get the signal to enter into a pyramid. So for those of you who are not familiar with the pyramiding, a lot of times you're waiting for a pullback, like 3 or 4 different kinds of pullback to get you buying little pieces of shares. So let's say you're getting a chicken McNugget size here, you're getting a chicken tender here, you're getting a chicken sandwich here, and a bunch of chicken sandwiches down here, right? You're getting little pieces at a time. And the plan is to size in and leg into it, where you're not jumping and buying all your shares right here at the very first moment. Everyone's done that. We've all made those new mistakes, right? So, yep. You get, oh, there you go, Tracy. You get the whole chicken at the bottom, the whole entire chicken, bone and everything. Yep. Okay. Okay, so Microsoft 10 EMA. Let's go take a look. Microsoft. So I don't know if anyone got in, but for those of you, this is how I've done it before in the past. If you don't make it to the close, you easily can have an open order. Now, in this case, you probably would have been stopped out depending on where you put your stop. If you put your stop right there, you would have been stopped out. If you put your stop right here, you'd be profitable already, right? Depending on whether you look at this kind of a turnaround pivot, right? Or if you're looking at this one, depending on how you play that. Yep. So if you're not in it yet, I would not, I would wait for a pullback. I'd wait for it to come back, give you another signal, get in wherever that signal is, and then wait for a higher move. Now, this is past earnings, did gap down just a little bit, kind of held up pretty well, and then continued higher. So again, we are going to only take trades that meet our strategies. The other thing that I have in my plan is I'm not allowed to place a trade unless I actually look at a chart. So if I get if I get an alert, I also have TradingView on my phone. I'm going to look at the chart itself. Does this make sense? Right? Very, very simple. Now I've actually gotten an alert that said trend reverse. The trend is reversing, and accidentally bought calls when I should have bought puts and kind of crisscross. So I'm going to look at the chart, just make sure, do I know what's going on enough to make a decision to execute my plan, right? So that's Microsoft. CLDR support hammer. Let's take a look. CLDR. Cloudera support hammer. Let's see. I mean, I don't see. Are we talking about the daily chart? I mean, there was a little hammer right here that I can see. A couple here. Is that what you're talking about? Who said that? Jay. Yes. Okay. Okay. Next up is Twitter on the Momo. Oh, and by the way, guys, I do have a couple buttons to make it easy to switch between my strategies pretty easily. Medium, term moving average, long term, and I have my templates kind of set up already. All right, so let's look at Twitter on the Momo. I'm going to click my Z button. I'm going to close this window. I still need to get rid of that. Okay, so if you're not in Twitter yet, obviously there's your buy. The close was, let's say, 43.69. So if you're not in, you can absolutely open order. Wait for limit buy 43.69. Wait for that to occur. Right now, actually, in this case, sorry, it's not limit, it's stop limit, right? Because you're waiting for the price action to go higher, right? So if you missed out and you didn't get in, obviously, if you did get in, you'd be a little bit red on the trade right now at the end of the day, just a little bit. If you missed it and you still think it's worthwhile, there you go, stop limit buy. If you are using options, spend $1,000 worth, get whatever your 40. We talked about just a minute ago. I would do 40 delta, 30 days to expire. So you'd be looking at, well, it'd be an odd time frame if you're talking about Twitter monthly options, because we're a little bit away. We're kind of in between the 30 and the 60 right now. So yeah, pick one. I'd probably do shares, honestly, on this one. $43, everyone can afford that. So you're going to do that, and depending on what your account size is, you could spend $5,000. So $5,000 divided by 43.69. Now, again, I don't want anybody trading this unless you've back traded this, you've paper traded this, you understand how the strategy works. This one does tend to, it is somewhat of a roller coaster. You can make some very quick gains, and having too many open positions can move against you really, really quickly. Okay, so that is that one. Let's keep going. Fiverr 10 EMA. Fiverr on the 10 EMA. Yep. I don't know if you got in, but that looks beautiful, ladies and gentlemen. Let's go back in time. Let's pretend that happened. Let's remove my indicator. Let's roll. Okay, let's say 5 minutes before the end of the day, guys, we get our orders in, right? We got our signal. Does that look good? Now, what triggered that? Well, this candle right here closed below the blue line, correct? Obviously, this candle pierced it and went lower, but we don't care about that. What we care about is, did yesterday close below and today above? This closed below the blue line, yes. This closed above the blue line. Yes, boom, you're in. You're in at the close. You're micromanaging an order. When I say the close, I really mean a few minutes before it actually closes. Some of you have permissions to trade extended hours. That's perfect. Sometimes if I'm in shares, I just throw in after hours. You probably will get filled. There's a lot bigger, a lot less volume and a lot bigger bid-ask spreads there. So yep, that's 10 EMA for fiber. Next is AYX Momo puts. Oh boy. Let's click on the Z. So if you took the exact strategy, you would have bought puts right here, right? And ladies and gentlemen, would you be profitable on the trade? Yes or no? Yes, you would. And you absolutely would. So for those of you who are, if you could change the blue bubble in your chat pane to all panelists and attendees, everyone can kind of see your answer there. So, yep. Okay, that is AYX puts. If you missed it, I'd probably wait, honestly. I'd probably wait on if you missed it. You can obviously have an open order, wait for it to see what would happen, right? So it might, you don't really know what's going to happen, but you might have a little pop up into here, right? If you're going to buy short right here or buy puts, the next few days might have a little pop and then roll over lower. I could definitely see that happening. We don't really know what's going to happen, but that's feasible. We'll say it that way. Peloton Momo. Okay, let's take a look at that one. You got in JS at 117.40. Yep, so you got in just a smidge behind the, yep. But good job, absolutely. A few pennies away, but that's good. Very good. And again, ladies and gentlemen, if you get an alert like for Momo and you're not in, go ahead and just put the order in. Don't chase the price higher, put the order in. Now, obviously, if you put the order in right here at this blue line, you would have had a good candle or part of another one to get filled, right? So you literally have, for those of that are kind of consolidating first before moving higher, you definitely have a whole 78 minutes for an order to get filled, right? And sometimes it may take off without you, and sometimes you may miss it, but that's okay. It's okay. AYX Momo. Yeah, what's the DOD, the dollar signs indicate? We'll come back to that, Jay, next time we took out the naked puts. So why you don't want and wait for a pullback and buy all the share, just asking. Joseph Smith, clarify that. I think I'm a little bit behind on this. Thomas Wong, partial to 10, 20, 30, 40, or per 100 shares, or 25, 25, 25. Yeah, absolutely. You can absolutely do that. So Thomas is kind of referring to the pyramid position trading. I haven't actually taught that strategy yet, but those who've been trading for a few years, you learn a few tips and tricks. That's what he's referring to. I do 10%, 30%, 6% myself. Same thing. Yep. You're legging in. Yep. In JKS Momo. Okay, so the most recent signal would have said to get in here. We still are green in this area. You would be a little bit red on the trade. If you got, depending on what you, obviously if you chase the price higher and got in up here, you're gonna be very red on the trade. But if you waited for your close, right here, this green candle, you had a whole candle or part of another one for your order to get filled if you're in shares and or options. So again, we could, don't panic. We could literally go sideways and either go down or go sideways and go up, chop. That's the thing about the Momo is you really don't need to predict. A lot of people spend a lot of time predicting. You guys have all watched CNBC. What do you think is going to happen? No one knows. No one really knows. We can guess, just like the weather. We can guess. We can hypothesize. We can make a case for something or another. No one really knows. But the thing about the Momo is you're not really predicting. You're just reacting to whatever's happening, right? So how much less do you own for your 10,000 shares for ISM? Had you waited and let the stock put in a bottom and bought the shares after the downtrend is reversed? Lead, I'm not quite sure I understand. I think I'm behind on the questions. Jeff McNeve says, how do you get the green arrow? Thomas Wong, because he's a nice guy, he's going to paste he's going to paste that URL in there for you for the indicator. If he doesn't, then here is the actual trend following indicator. That is the green arrow. I'm sorry, that is the Momo one. The green arrow for the basic, the 10 EMA, I apologize. Let's do it this way. 10 EMA is this one. Thomas, I'm not sure if you have the 10 EMA for Thinkorswim, but if so, put in there. If not, it's okay too. How about put sales on AYX? Great question. AYX. Ooh, pretty choppy. So one of my rules for the put sales is what? We have to be above the 200-day SMA when we sell, which is this guy. So you certainly can, but you kind of deviate from the strategy. Now, what's this? Does anyone know the significance of the 200-day simple moving average? Does anyone know? It is known as the long-term moving average, right? It's kind of like one of those things where everyone does it, so it's not really a thing, but it becomes a thing when everyone else does it, right? And so when you close below, typically on most stocks, when you close below a 10 EMA, a 200 SMA, 200 simple moving average, because it's the long-term moving average, long-term support moving average, things typically chop around and don't look pretty. So in this case, obviously, I would not have sold because we're below the 200 SMA. The reason I like above is because you'll see once you get above the 200 SMA, things are nice. Once you get below, you guys can almost see that here we got above and then it kind of fell off, right? So all that to say is I would not sell puts on it. Obviously, you're welcome to your account, your decision, right? And you absolutely can have analysis paralysis, right? Let's see, where did I miss Laos? That's another question. AYX give a signal tape as below strategy, you still sell puts, right? So no, Tracy, because of I probably need to update this dollar sign. If it's below the 200, don't show that. I didn't even think about that. I need to update that. Yep. So even though the AYX continued lower, I'm up on the put sale, at least for December strike for the level I sold it at, right? So Thomas sold what I guess is probably the normal monthly. Let's see, what is the normal monthly in December would be like the December 18th, I think. I don't have the option chain in front of me, but I think it's the December 18th right here. Oops. December 18th would be right here. So depending on what strike Thomas sold, Thomas, can you share I don't know if you sold like 100 or whatever. You can. I'm just saying it kind of deviates from the strategy. Obviously, Thomas has been trading for, I don't know, like 100 years or something. Thomas, how long have you been trading? Sold the 90 strike. Okay, so that's what he said. So he basically is saying, hey, I don't think it's going to go below this level. Right until here. I don't know what kind of premium. No, he's not 100. At least I don't think he is. It doesn't look 100. Thomas, what kind of premium did you get on that 90 strike December? So he sold basically, a little over 30 days away. Got $1.02. Okay, so his break even is obviously 90 minus $1.02, right? So 90. So here's the cool part about selling puts. It is a more advanced intermediate strategy. If you've never touched options in your life, do not touch these. These are fireworks that will go off in your hand. You will lose fingers. Just trust me. I've lost some fingers, some nubs. So what Thomas is basically betting on is that it can go sideways or lower, almost kiss that line, but he's still going to be profitable because he got some option premium, which means he's guaranteeing anything below $90, he's guaranteeing. So it's kind of like selling an insurance contract. You don't think something bad's going to happen. And because of this big move right here, you think the IV is high or low, guys, on that kind of a move. Is it going to be high or low? Is the implied volatility going to be high or low? Well, it's going to be high. Yep, absolutely. It's going to be high. And because it's high and you're selling option premium, is that a good thing? Is that like where the moons align and kind of work in your favor? Yeah, absolutely. Absolutely. So that's a good, decent spot. Yep. Obviously he could have sold, Thomas, you ever sold an in the money put like up here instead of down here? I guess it depends on whether you want to get put shares or not, but yep. 90 strangle. See. What other questions you guys have for me? Let's hit me with a ticker symbol and a strategy, and let's take a look-see. What momos are my in? That's a great question. Let's take a look. Let me open my phone. So I closed 2 puts today. I bought them back. You're not asking about that, but I'll touch on that in a second. I closed my Peloton. I had the 100 January 15, $100 strikes. I think it was 60 something %. I closed my CrowdStrike $110, closing it on the put sale means I bought to close, right? So I sold it for X number of dollars and I bought it back at a lower price. I closed both of those today for 2 something change an R, 2R something. As far as momos, I am in Beyond Meat. And let's go look. Let's take a look, see. Beyond Meat, I got 5. I'll show you. Okay. Now, does everyone, I'm sorry, I have, let me see what do I have. I have the 170 strike calls for December 18th. So when I bought them, the price action was right there, right? So I bought let's go back in time. Let's get in our time machine. Let's get in the DeLorean. Let's go back. Okay, so here's what I saw when I got an alert. You guys see, and that right there, that's one of my favorite things, a little exclamation point. Someone tell me what exclamation point means on the Momo. It means all your dreams are going to come true. It's a fade. Now, why does a fade matter if I'm playing options? Well, let's say that I'm going, what I bought a 170. So I bought a 170 call up here, expires in December. So this is all I saw. Now, if I bought it up here at the high, because I'm chasing, which I didn't, then I pay high, more or less than when it's here. I'm going to pay more. Well, if I waited for the candle to close, right, that's kind of where I would be at. And so I got what I spend. In this one, I spent trade price $9.25. I spent $9.25. Oops, $9.25. Let's see, let's do it this way. BYND, December 18th, 170, $9.25. Does everyone have any questions on why I got into that? Why, how? You guys are holding me to this too, right? So, yep. So I got into that, and let's take a couple candles, right? Again, my strike price is up here, but it's for December. What I would say, December 18th. Yep, December 18th. So here's what's going to happen. December 18th is right over almost. Let's just pretend it's right over here off the screen. So I'm basically spend $9 saying I think it's going to go higher. Now, it doesn't necessarily have to go in the money for me to be profitable, right? If it has a sharp move up higher, my $9.25 could easily become $12, $13, $14, $15, or $16, depending on how quick the move is, what the IV is. And in our previous session, we talked about option pricing. Option pricing is made up of 3 components. Number 1 is time. Number 2 is ATM machines, ITM, and OTM. in the money, I'm sorry, at the money, in the money, out of the money. And the third thing is IV, right? So when you're thinking about options and I paid $9.25, there's three kind of packaged things that cost $9.25 collectively, right? And as I roll through each candle, I'm going higher, right? So at a minimum, my $9.25 is going to go higher. Let's see, what does this say? So at the close, it was $9.70. So I'm up a little bit, right? No big deal, right? You guys understand that? JS, intrinsic value, yes. Yep. IV implied volatility. Implied volatility. All right. So how many of you guys have played options before? Put a O in the chat pane if you've played options. Okay. Put a no in the chat pane if you've never touched options. An O if you've never played with options or want to learn. Okay. Yes, number two is your intrinsic value, meaning how much premium or how much are we in the money, out the money? Yes, absolutely. Okay, so for those of you who've not yet touched options, we do have a beginners trading course. Let's go take a look at the website real quick. And right here for $99, you can spend a weekend. I think it's a 2-hour class. You can go through this. It's pretty good. Pretty good little class. You get kind of the basics of this, the basics of options. I really recommend, though, if you've not been trading profitably for at least 6 months in a row, that you kind of shy away from options for now. They are like a Ferrari. You might hear about people making awesome money. And in my private mentoring group, everyone wants to learn options, and you ask why, it's like, because the ROI, but you guys know ROI is a double-edged sword. It sometimes comes with high risk. And if you do not know how to drive a Toyota or a Chevy without wrecking, getting in a Ferrari is probably not the best idea. But you want the ROI, you want the speed, you want the excitement. Well, maybe stay out of the ditch and drive without speeding tickets and trade profitably for 6 months before you jump into that Ferrari, right? So this is this kind of how it ended on the day. So I'm up just a little tiny bit, right? And again, I got in call options at that level at the 170 strike. Okay. Gotta know how to drive. Yeah. Before you put the turbo, before you get behind lots of horsepower, you need to make sure you know how the brakes work and the steering wheel. Okay. Next, I am also in CrowdStrike. CrowdStrike, I'm up nicely on this one. I bought the December 4th weekly 143s. Let's take a look. So I got in right there at the close, and the close of that candle, CrowdStrike, December 2nd, 143s. So December 2nd, 143, right there, basically. So I've I'm up, and again, we're still going higher. Now, can it go like this and continue higher? Absolutely. Absolutely can. You can get chopped up, right? Go bearish, no, go bullish and continue higher. Absolutely. That is one. Another one that I'm in that is not green, right? I don't take all profitable trades. I wish I did. Someone knows that secret, let me know. We could all be billionaires by next Tuesday. Another one I'm in is a Tesla, TSLA. And I have the December, I'm sorry, I have to glance. These are thinkorswim, these tiny fonts besides their, on the mobile, beside their user interface. All right, so I bought the December 4th 450 calls. And I bought at the close right there, and it's down just a smidge. So the, oops, where'd it go? December 4th. I said, yeah, that's the close. So the 450 calls be up here. So bought the the December 4th, 450, Butterfingers, December 4th, 450 calls. And I paid the last trade pie. Let's see, where am I at? Last trade price was 17,075. So just a little bit red. Now, obviously, we still got a green area, right? We're still bullish. It's just had, we had this nice move up and then it kind of pulled back. Now, for those of you who are familiar, you know what a bull flag looks like. It looks like this, where we make a new high, pull back, and then continue higher. Now, I don't know what's going to happen next week with the elections. It's Friday and we don't know who's the president, who's not the president for next 4 years in the US. But it doesn't matter to me. Well, I obviously voted, but my trading is my trading, and Joe Biden or Donald Trump doesn't have anything to do with my plan. I'm going to be successful regardless of who's going to be in the White House, right? That's my plan. I did hear someone yesterday said I'm going to go into deeper depression if X or Y candidate is in the White House. Well, I'm not going to put my happiness in the hands of someone else who, whatever happens, happens, right? I'm not gonna base the way I think in my happiness on something else. Does Jeremy know? John X, I'm not sure what you're referring to. I'm sorry, guys. I'm a little slow. And do I look for good open interest? SJ, I actually don't even pay attention to open interest. Of course, if you want to buy, or everyone who's buying or selling options, there has to be someone on the other side of it. So obviously, you have to have some open interest, some to get in and out of these trades. But I don't really use that as a basis to what to buy, what not to buy. Give a rule for time and price if you missed the initial Momo and you still want to get in. Okay. Gotcha. So let's go back in time and let's take a look. Let's say pretend that I did miss the alert on my bike, or I'm unconscious on the side of the road, whatever, right? Whatever. And the close of this candle is 420.24. Okay, so 420.24. And at this point, I'm going to limit buy. And let's say that I can look at the option chart for, you guys know in Thinkorswim, you have to look at the chart just like for the stocks, but for specific options in Thinkorswim. So that's pretty cool. And let's just say that it was, what I say, oh, it's not recognize my face. Because I'm an imposter. Did you guys know I have a twin? I actually do have a twin. Shoot. I have to look at my password. So let's say I wanted to limit by 1950 right here, right? Let's just say. And let's say I'm going to leave that open. I'm going to buy the December 4th, 450. And let's say I didn't get filled. Let's say I do, I don't know, right? I'm going to keep it open. And obviously if I keep the order open, I would have been filled one way or another, right? Now the green exclamation means they fade. So that's typically usually golden. How many of you guys have back tested and feel that this gives you a slight edge? The fade indicator gives you a slight edge. Does my twin have multiple smarts? I'm not sure what that means. Multiple smarts. You're gonna have to explain. Let's see. Hi, Matt. You ever Momo trades logged in? How are your Momo trades logged in spreadsheet R calculation? So I do mine based on R's. Obviously, the Momo you're kind of risking an open amount, but I do count them as R's. Yeah. You can't really do anything else. I mean, that just like with put sales, you're not really using an R system in some strategy. You are still managing risk, right? In a Momo, you're bullish and then it moves against you and you get out. It's not open-ended risk, unlimited amounts of loss. So you are still mitigating risk. You really follow the same R system strategy. Yep. Multiple smarts. Oh, multiple smarts versus multiple stupidity. Get it? Yes. Sorry. Yes. Sorry. I'm a little slow. Okay. So we continue. You guys can see kind of chopping around, going sideways. On Tesla. Tesla's a beast. It's one of those once it gets moving. You guys can see no matter what. How many of you guys learned when you back test the Momo, your opinion of what you think is going to happen doesn't really matter. It's going to do what it's going to do. You can form an opinion. You can hypothesize. It's going to do what it's going to do. Doesn't really matter what you think. Doesn't matter what I think. It's going to do what it's going to do. Yep. Okay. And also in our swing trade log, we do have the column, of course, for whatever strategy. So we're trying to connect buying, like looking at a ticker with a strategy, right? Versus just saying, what do you think about Amazon? At the end of the day, I don't know. Nobody knows. Now, I can give you an opinion, but it's going to do what it's going to do regardless of my opinion, right? So again, when you have things that tell you when to get in and when to get out, it takes a lot of weight off your shoulders, right? Your job as a trader is what? What's your job? What is your one and only job? To get emotional? To execute the plan? Is that your job? That is your only job. Save the money? No, your job is to execute the plan. Now, what if you feel like your job is to get a better entry, or your job is to squeeze off some more R's? You can overthink that, put a lot of emotional, mental capital in that, and it not even work out, right? But if your job is to execute the plan, you got a pretty simple plan. In tonight's class here that starts in about 45 minutes, I'm going to be teaching the 10 EMA, like from a beginner's point of view, right? So we're going to explain what a candlestick is. We're going to explain how to calculate risk, like from a very brand new. So if you have friends who you want to introduce into real life trading, this might be a good thing. We're going to talk about good thing to invite them to, right? Text them, hey, Matt's doing this class starting 45 minutes. Sign up. It's free. Great way to introduce people to RLT. Free class, right? Free stuff. And so I'm going to be going through that, and I'm going to actually share an actual plan, a trading plan, which is uses the 10 EMA, and it talks about max number of open positions and actual plan. You guys have most of this. Let's see. I believe you have most of this right here. Swing trade sample swing trade plan. I've adapted it just a little bit for the 10 EMA, right? So invite your friends and families or kids even, right? Can you quickly share a link to post? Yeah, a link to share that. Yeah. So people ask this all the time, which we can certainly answer every single time. But if you guys go to our website and you go to here, the event calendar, and click on it, it's going to show you all of our open events. This is Jeremy standing on top of a vehicle. So intro to Swing Trade Live. Here is the URL. When's the next kids event? We don't have anything on the calendar yet for a kids event, but we do have a couple kids classes and lessons. If you go to online courses, you'll see Trading for Young Adults is here. If you go into your dashboard, there's RL Kids. It's a free class. This is an older one. This is the new revised one, right? Which is the new banner. If you have not yet signed up for our Traders Summit, that is coming up December 12th. Again, go to our calendar. Right here's a Trader Summit. Now, this is free. We're still kind of building the lineup of speakers. You guys may recognize some of these people. Top dollar paid speakers and experts. It's free if you want to sign up. I've already, of course, signed up, but if you want the recording, it's $9.97. And so when you sign up, if you signed up, let's see, if you signed up and got the recordings, you're going to get two links. You're going to get the recordings link, which is going to basically be a playlist after each session. After it's recorded, we're going to upload to YouTube. So maybe 10, 20 minutes after a session is over. If you want to watch it live, right here, you're going to get another icon. So when you buy the recordings, you get both icons. If you just want to do it for free, you get the live option. So check that out. Yep. I didn't have access to the desktop here. I just didn't have access. Okay, not sure what you're referring to there. Okay, what else? What other questions, concerns, oppositional viewpoints do you have? Do you guys feel like the swing trading room is kind of shifting gears a little bit more than, instead of just, here's a list of stocks, and we spend a lot of time looking at stocks that I wouldn't necessarily take a risk on. The cool thing about the list of 15 that I have, which is here, my 15 watch list, the cool thing is that I've kind of tested and played with these and I know how they work. Someone asked me today about AYX. AYX is a little bit frothy, and we'll see, but it might be replaced. This is the same list I gave out a couple of weeks ago. The only difference is I put Teladoc in here. I had LVGO, and LVGO was acquired by Teladoc. I don't know if it's closed or not, but so I like Teladoc as well. You'll see all these here. The sales quarter over quarter is nicely growing. Tesla is kind of an exception, down a little bit, a lot in the most recent quarter. Let's see what quarter that was. I believe that was October. Yeah, so 2 weeks ago. 49% down is pretty significant. Like, that means your revenue for the quarter sliced in half, basically. Right, and AYX still kind of falling out of love here with its growth. But these are companies that I like. This is the 15. I'll put the link in the chat pane if you guys want. Twilio Momo. Yep. Oh, let's see. So, ladies and gentlemen, if you got into Twilio, would you be at the close? Would you be in shares or options? Would you be profitable? Yes or no? At the end of, what is that, 3 days? Yes or no? Mike M says no. Tara says no. JS says no. The answer is, that is a big no. That is correct. You would not be. But so here's why you have to think about this in a systematic. I did a couple of interviews a year or two ago, and people would ask, they would say, what one thing would you give a brand new trader? And my advice is usually always the same. It's get a system. It doesn't have to be automated, but you have to have some reason, some rules to get in and some rules to get out. And it can't be play it by ear all the time. It cannot be that. You will drive yourself nuts, right? You want something that, imagine a light goes off and, hey, time to get in. And then another light goes up, oh, time to get out. You can't get any more simpler than that. And that's kind of what this is when you set up the alerts, right? When you right click, go to add alert, when you go to trend following, when you click once per close and you say trend reversing. I'll stay right there for just a second while you guys take a picture of that. You're gonna take some screenshots of that. That's how you set it up. And trend reversing is basically just means these little triangles. It's going to say trend reversing, and you look, you decide, do you want to get in? Do you not want to get in? Right? And so the thing about Twilio, if you guys want to take a quick picture of that and closing it down in 5, 4, 3, comes after 3, 2, 1. The thing about Twilio, what's amazing is, again, this is one that tends to move for some period of time. And if you look at this, if you got in here, doesn't matter what you think is going to happen, all this chop, right? Kind of make a new high and then roll over, kind of make a new high and roll over a little bit more, but you did have some chop action right through here, right? So you could have, you absolutely could have made a move at a minimum. You could have made a move from, even if you're in shares or whatever. So you limit buy here and you exit here if you're playing the exact rules, right? And let's say that represents, I don't know, half an R, nothing wrong with that. And again, let's see how many candles. That would have been 5, 10, 15, 20, about a week and a half, 2 weeks, right? Not a bad thing. Now, I tend to be very cautious and take profits early if I'm playing bearish, because the market is designed to go up over time, right? It's the escalator up Don't be the guy running down don't be the guy or girl running down the up escalator. Just go, if it's going up, be smart, go up, right? It doesn't require a lot. So again, this is Twilio, and it tends to move for a few weeks in one direction or another, right? So again, we would have got our signal here, too many candles. We would, let's play this out. What do you think is going to happen? We're going to get in. It's going to chop around, right? We're going to be upset now. We're not going to panic. We're going to let the strategy play out. Some of you guys would have taken a loss down here, and look what you would have missed out on. The IV is much lower running down the up escalator. Yes, but JS, is your job to get lower IV? Is it to execute your plan? You guys also have to think about what does success look like for you, right? JS, Tara, Tracy, Mary Louise, John Axe, Pam, Jay, Michael, John, Brad. What does success look like to you? I would say to at least my coaching students, I would say success is executing your plan, regardless of whether you lose an R or not. Now, how many of you guys have a very different definition of success? What if you had this like extreme accountability to your own plan, where you either executed the plan exactly or you didn't? It was a pass or a fail. It was a binary event, right? You get a 1 or a 0. You get an A+ or an F, right? You did it exactly. We try to like wiggle this, try to get a better price. Let's dollar cost average. You totally deviate from the plan. We're just saying, hey, I want you to cook and make grandma's recipe exactly as intended, and do that for a while. And magically you'll be profitable if you can do it long enough for a time and you don't quit, right? And so on Twilio, look at this nice run. How many of you guys would have exited early? How many of you guys would love to have just one of these trades? Obviously, if you did options, you'd be up really nicely, right? Depending on how many contracts you bought. But how many of you guys would like this kind of a move, right? And for me, trading is kind of like being on a canoe on a very calm lake. That's what it's like for me. Now, if I was to look into your mind and record what's going on when you're trading and your emotions, it may resemble more like an airplane falling apart in the sky, right? Rattling and craziness. I'm looking for the calm, smooth sailing. Whatever happens, happens. I'm going to react to it. I'm going to do what I need to. I'm going to execute my plan. That's how I approach it. That for me is what I like about swing trading. That's why, I tried to do the whole day trading thing. It didn't quite work out well. I lost a big chunk of money in the first year trying to do it. And still struggle. So easy enough not to do it, right? Okay, so guys, tell me in 3 words, how would you describe your current trading right now? Let's say the past 90 days. 3 words, 2 to 3 words. How would you describe your trading? Painful, all over the place, average, progressing. Nice. What else? Slow, 2 out of 3 scattered, lousy, abysmal, disappointing, good, and bad. Now, let me ask you guys, those of you who will say had some not great words to describe your trading, how many of you are following your plan exactly, and how many of you are trying to deviate and get smarter than the plan? So if you're guilty of that, it's okay, right? The most expensive mistake that you can make is what? It's the one you don't learn from. So if you're losing lots and lots of R's and you're deviating from the plan, that's a pretty simple fix, right? You can refine the plan, but if you're deviating from the plan all the time, tonight's class, I'm going to give the actual, like a basic starter plan. Again, this is for brand new traders. Some of you guys in the room might be brand new traders, but I want to give you a basic kind of starter entry level. And this is like a layup in basketball. Okay. This should be super easy. We're nothing complex, super, super basic. And if you're struggling, reach out to me. I'll be happy to give you some of these documents that I've created. If you're interested in the swing trading plan, I'll share it in tonight's class. If you're watching the recording, reach out to me on Slack, or email support@reallifetrading. But that's kind of what I have for you guys for today. Again, the class starts in about 30 minutes. Hit me with whatever ticker symbol and strategy you want to look at for Merchant Monday? Hit me. Let me get this going here. Okay. Ticker symbol. Yep. You're welcome. You're welcome. Go ahead and hit me with some ticker symbols. Red for Thomas. Come on. I need two things, not just a ticker symbol. I got to break you guys of this habit. Redfin. Just what strategy, guys? Or any of the above, maybe. Baba, CLRD, WBT, Apple, Momo. Yep, perfect. Guys, nice. Momo, TDoc, Momo. CLDR, I'm not sure. Oh, Momo. Okay. Yep. CLDR, Momo, OSTK, Terra. Tell me what strategy you want to look at. JKS, Momo, perfect. JKS, Momo, Hog, SJ, what strategy? I'm going to try to get you guys, try to learn you how to do this. You remember that in Beverly Hillbillies? I'm going to learn you how to do something instead of teaching. Okay. OSTK, naked puts. Got it. So we'll do puts, naked puts, retrain the brain. Yeah, no worries. David Ray's TSN, Momo. I didn't hear about the HOG, HOG, Harley Davidson SJ. Tell me what you want on that. CLRD, I think I got, was Momo. Yep, got that. Baba and Redfin. I don't know if I heard from you guys on that. BSTO 10 EMA. At some point, guys, you're going to be able to do this stuff in your sleep. And you're going to be wondering, what in the world have I been doing all this time trying to make it complicated? Math said it should be easy. Math said it should be boring. Why am I trying to make it exciting and losing money? Right? If you guys want to make money, I'm sorry, if you want exciting, there's plenty of things you can do way cheaper than losing R's, right? I mean, you can go buy a $50 lottery ticket and not have to worry about losing R's. There's a lot of things you can do that are exciting. I'm not recommending that, by the way. Plug, put sales, okay. What if we want analysis of your thoughts on a certain strategy? I'm not sure what you're asking, Edward. Do you use extended hours in Momo? No, I do not. Turn that off. Actually updated the strategy the other day in our document, just because people ask that a lot, and I just I updated it. So Redfin is put sales, got it. Buy leaps lower. EA put sale. Okay. What else? You guys are doing great. Look at this. Any other questions for me? Is there a leaps class coming soon? Buying calls coming soon? Ross, we have a basic options class. Kind of talks about a little bit of that. Intro to options here. $99 that talks about that. We don't really have, everyone wants super specific training, you know, like I want to learn how to buy leaps on a down day. I want to, we haven't got there yet. So, yep. Okay. Keep it simple. Playing traffic is exciting. Riding a bike, jumping out of an airplane. Yeah. Yeah. You're I feel like you want your stock trading to be boring, right? It's the lake, it's the zen. Like I want to take a nap during the day. I don't have to worry what the market is doing. Well, who's present, who's not present. I don't have to worry about any of that, right? That's the ideal zen way to do it. Yes, bring on the boring. Yep. Okay, cool. Thank you, ladies and gentlemen. Don't forget to love life, live life, and trade it. And we'll see you in our next class. Thanks.